Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the magnificent Monday, the September 21st edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I do want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't give us a call, you can always let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. And inside that subject heading, please put radio show question. Of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magical, magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now you can see all the indices trading in the red. We'll go figure out what that means, where support is at, what patterns are going on for multiple time frames out here. But the Dow's off 816. The S&P is down 76. That's nearly 3% and 2.25% respectively. NASDAQ 100 down 1% or 110 points. Russell's off 4%, 62 points. Semis down 1%, 21 points there. New York Stock Exchange 3%. Down at 377. Actually, New York Stock Exchange has completed at least the one-to-one version of its A to B equals CD to the downside. So we'll take a look at those patterns out there. Of course, I want to hear from you. Gold is back $52 and probably going to see more pain there. Why would it be seeing more pain? Well, just simply from the standpoint of the U.S. dollar index, which we shared with you at bottoms a little over a couple weeks ago. Did that with that Rhodes momentum indicator signal out there. We love that pattern, because we know that can create that little boomerang effect to the upside. Now, what the U.S. dollar index, we're looking at the December contract, is doing that it hasn't been able to do, so the close will be important. But any close today above 93.50, that's the top of its daily profile. Ever since the Rhodes momentum indicator bottom, price has found resistance at the top of that profile. Well, today could be, don't know if it will be, but it could be a different scenario. And if that scenario says price close over 93.50, the price target for the U.S. dollar index is headed up to 96.61. That's its TD9 breakdown level out there. And if the U.S. dollar index is going to do that, chances are gold, silver, precious metals, miners are going to take a bit of heat out there. So that's the U.S. dollar index. But I want to get back to the indices out here. So we looked at, as I did the 1 p.m. update, we did the S&P 500. Let's do this. Let's change this over here. Change this over to the NASDAQ 100. We come back to this, but let me put up the NDX 100. What this is we're going to, well, I think I just have to put NDX. There we go. What we're going to do is take a look at daily, weekly, monthly, even the quarterly time frame. Again, looking for the patterns out here. In fact, let me do this here. But just before we get to these charts, just something that you and I are going to have to consider out here. What do you mean we're going to have to consider something, Steve? Oh, well, if we take a look at the core indices out here, in the core indices, you've got the Dow in the upper left, the S&P next to it, then the NASDAQ 100. The bottom row, we've got the Russell, the New York Stock Exchange, and the Semiconductor Index. Now, what you'll see up at the top, these are weekly time frame charts that we're taking a look at. But I just simply want to start from here as we go pull apart the other indices. Here what we can see, they're weekly time frame charts, but the dates that are up at those highs, that's the actual specific day of the high as of this moment. So here's what we know. We know that the Dow topped on February 12th, 2020. The S&P and the NASDAQ 100 and the semiconductors all on September 2nd, 2020. Dow tops first. Never a good sign when the Dow tops first. Russell 2000, heck, its top is way back in 2018, August 31st to be specific. If we take a look at the New York Stock Exchange, January 17th. So it's often when you will see major tops, and that's a possibility that we need to consider right now. Major top out here, especially because of the behavior of the Dow, that if this is a major top, yeah, those March lows and beyond are still game. So we just want to keep that into consideration. Now let's come back to take a look at the daily. Begin by taking a look at the daily time frame chart for the NDX 100. So that was kind of big picture thinking out here. But the reason for that big picture thinking here, if I put up the monthly time frame chart here for the NDX 100, what are you going to see? You're going to see a Rhodes momentum indicator top. Now, the month has not ended. It's only September 21st. If this were September 30th, or whatever the calendar day is that ends the month, the trading days out here, this would be a confirmation on a monthly level of a Rhodes momentum indicator top. We just looked at what took place on the U.S. dollar index, and we can look at all kinds of instruments and the Rhodes momentum indicator signal out here. Now, in the case of the NDX 100, its key level of support right now is 10,217. Any close below that, well, then that key level of support will have broken. And yes, the NDX could move all the way back to 61.64. I'm not saying by when, not giving a time frame out here, but it is absolutely something to consider in the reason that we started off with the chart that we did to show you all the different topping dates out there. Usually, when the Dow tops before the other markets out there, it really spells bad news. I know somebody's saying, didn't we already have that bad news? And that was a move down to March. That was just the first piece of bad news out here. So you got a key reversal and a bearish engulfing session on the monthly time frame. On the quarterly time frame, just for the heck of it, what do we have? Now that quarter is not going to end until September 30th. Bar number 7 of a TD9 count out here. We could see a shooting star confirming the Rhodes momentum indicator signal. Don't know whether we will or we won't, but that's something we should look at the end of the quarter. If we come take a look at the weekly time frame, what do we know about it? Well, on the weekly time frame, price is trading below Stevie's green line. Currently printing at 11,339. When you're below Stevie's green line, it says that the target's going to be your breakout support area, and that's at 94.89. Now, remember, folks, we're looking at the NDX 100. We're going to switch over, take a look at the NQs because they're pertinent. They provide us with additional information to assist us with navigating these markets out here. But right now, we're looking at the cash indice. If we take a look at the daily time frame, what do we see? We see prices below its breakout level. That's at 11,106.93. That sets up the target of 99.50 to the downside. Doesn't mean that it's tomorrow or the next day or that that we don't get bounces in between, because we will. But right now, prices below key levels of support, daily, weekly. Well, it's below the weekly level of support, and the monthly is it's above that, but it's got that bearish reversal candle, which is always troublesome. Now, what are we going to do? We're going to go switch over and take a look at the NQ because people want to understand, hey, what's going on short-term wise or what's going on longer-term wise? Well, Steve, how can you do both? Well, we can do both. We're going to do both. How are we going to do both? Well, first, we're going to take a look at the daily and weekly TAS market profiles. What you're looking at here is the NQ. Let me just expand the chart, and that way nobody is confused out here. So here's the daily time frame chart for the NQ futures contract. And you can see I've drawn in an A to B equals CD to the downside. That would take price to the 10,034 level. However, not so fast, or at least not so fast with regard to when are we going to get down there. Yes, is price below the B point, 10,924.75, the trading session from September 9th? Yes, but what else is price doing? Right down to support, the weekly TAS market profile, 10,726. So we get back from this break, because I know somebody requested it, are there any kind of short-term signals out here for the NASDAQ? And we'll go look at each of them when we return. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, Dow's off 769, S&P 70 points. So we're taking a look at the daily time frame chart here, but we have on both daily and weekly profiles for the NQ. So the key level to be watching there is 10,726. You can't make an A to B equals CD to the downside until you break through key support. Yes, price below the B point of the A to B equals CD to the downside. Yeah, but that doesn't guarantee that you're going to make an A to B equals CD to the downside. However, those odds improve if you see a close below 726, 10,726 inside the NQ. Dow equity future contract right now is trading right at the bottom of its weekly profile, 26,758. Both of these are suggesting that we could see some kind of bottom today, tomorrow, the next day out here, as long as those levels hold and some type of counter trend rally. That could last a week, could last 2 weeks out there. So be careful. Don't just totally jump on board the short train and assume that we're headed lower. Yes, over the bigger picture, what we took a look at, yes, but right now we're taking a look at, hey, what's price doing? Where's it trading into? If you didn't know where support was at, well, then hey, before understanding where daily, weekly, monthly profile support was at, where the real buyers are lined up, I would have just simply come on the air and said, guess what? The NQ is headed to 10,034. I can't say that today. I can tell you that's the A to B equals CD, but you must know where is support. Now, the ES Mini is trading below the bottom of its weekly profile. So watch 32.59 at day's end. We're at 32.38. So it's about a 20-point move to the upside that price would have to regain in order to have tested and rejected the bottom of that profile. I don't have the weekly profiles turned on in the Russell 2000. That price is actually below them as we speak right now. Not that I'm not interested in the Russell, I am, but really we're going to focus more on the indice that has let us down, and that's the NQ, at least at this moment in time. So to do that, the question is, geez, Steve-O, prices held. What other patterns are going on? So let's begin by going in reverse order. By reverse order, I mean from a short-term time frame chart. Let's begin with our 5-hour time frame chart. So it's a 300-minute time frame chart. What do we see? Again, very much like we just took a look at earlier with the U.S. dollar index, the Rhodes momentum indicator bottom. Guess what? On a 5-hour time frame, and this bar will complete at 2 p.m., so another 40 minutes. Don't know what it will look like in 40 minutes, but if we have a bullish engulfing candle, it's already a key reversal session. So as long as on this 5 hour, because the high and low of the prior candle has been exceeded, and we are in a stretch condition out there, and as long as there's a close one tick above the open, that would be a bullish reversal candle. Now, where's resistance for this time frame? It's 10,892. Look, folks, the numbers that I give you are going to be different for each of the time frames, but 10,892-ish area, remember that line's going to go up and down as price moves higher. But if price can get above that, then the next target becomes 10,967, 11,094, and then finally be about the 11,215 range. But on the 5 hour time frame chart, you're seeing the bulls try to flex their muscle, defend the support of the weekly, and now generate a potential Rhodes momentum indicator signal for the 5 hour time frame. For the 4 hour time frame, we've got the same thing going on. We already had the piercing candle that took place at 10. We're getting another follow through right now. We got a hammer candle for this 4 hour time frame chart. Resistance at about 10,874. Above that, 10,956, 11,062, and then finally 11,219. Actually, one more level above that, 11,539. Is that even a possibility? Absolutely. If somebody told you otherwise, well, Stevie's here to tell you otherwise, if that really isn't otherwise. If we take a look at the 2 hour time frame chart, what do we see out here? Well, we see wave number 7. That's letter G. So that looks to be confirmed. Price is trading with inside a bearish structured profile. So that's a beautiful thing, because here you'll get a lot of information revealed to you, assuming that the NQ continues to rally. So it's a bearish structured profile. So we know that sellers inside the NQ, that like the 2 hour time frame, they're sitting between 10,875, that's a key number to watch, and 10,818. Well, we're above 10,818. We're above Stevie's red line as we speak right now. Watch 10,875. Because if price closes above that, holy shnikes. Says 11,539 could be on the table, but we'd first say, hey, 11,150 would be a resistance level out here. Okay, so you've got potential confirmed on the 5 hour, you've got it confirmed on the 4 hour, you've got wave number 7 on the 2 hour time frame. How about the hourly time frame? I'm glad you asked. What do we have? We've got a Rhodes momentum indicator bottom pattern. It's been confirmed. We had the piercing candle out here. Price is inside a bullish structured profile for this time frame, 60 minutes. So where's price headed to? Very likely 10,918 to 10,941. Watch 10,941, because if price closes above 10,941.50 to be exactly, that tells you about a short-term change in trend for the hourly time frame out there. And actually, its next area of resistance would be 11,288. So far, each of the time frames we're looking at show bottom signals. We know that the weekly profile is held thus far. Let's go even shorter. Let's take a look at the 30-minute time frame out here. You can see the Rhodes momentum indicator signal out here. There were 3 different bullish reversal candles out here. There was a bullish engulfing candle that happened at about 3 o'clock. Was it 3 or 5? I can't remember now. The first one took place at 5:30. So you had one at 5:30, you had a bullish reversal candle at 6:30, you had another one at 8 o'clock this morning, you had another one here at 10:30. The 10:30 candle session was a key reversal session. None of those lows have been taken out. You had a lower low, but by the time the bar closed, so you've got the confirmed, or the confirmed, whichever you want to pronounce out there, Rhodes momentum indicator bottom. Price is trading with inside its opening range levels, the low of which is 10,804. That's the European opening range. And where price is likely headed to, well, first you've got the top of its profile. So resistance next up for the NQ should be 10,880. If price can close above 10,880, you've got resistance at the 10,923 to 10,939 level. Above 1039, the run would take you up to 10,990. And above that, you're looking at 11,163. So you got to take these things one step at a time. You've got the confirmed bottoming signals for the NQ on all the different time frames that we have looked at thus far. Each of them are going to different levels of resistance and support and so forth. We've got a caller on the line who wants to continue discussing the NDX 100. That is John in Philly. John, thanks for calling. Thanks for holding. How are you? How was your weekend?
It was excellent. I trust yours was the same. And, Steve, I'm calling right in. My ears picked up when you were just going over that the NASDAQ futures contract, that 2-hour chart with the Basil Chapman patented leg G lower phenomenon, which we all like so much.
We love Basil.
And what I wanted to just follow up and ask is, given that we've had this sell-off in the S&P and the New York Stock Exchange have taken the brunt of the price damage here today, whereas last week it was the NASDAQ 100 that was taking the brunt of the damage.
Yes.
And we're now on that NASDAQ, the futures and the cash. Shoot, we're almost back up to that series of lows near that 109.25 area that occurred, I think, on the 11th and the 8th. So that's just to reiterate where we stand. Looking at the daily chart, Steve, is there a setup here where we could envision the scenario where a very important bottom is forming right today, on the daily chart basis, not hourly, half hour, that sort of thing, but daily?
Yeah. So, John, we're just about to go to a hard break here. If you'd be kind enough to hold through that, we'll go explore the daily time frame. And what I'll do is I want to take a look at the equal-weighted ETF for the NDX 100. That's the QQEW. So we'll take a look at all that when we get back from the break. We're on the line with John in Philly. This is Steve with TFNN. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that will take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're on the line with John in Philly. We're discussing the NASDAQ 100. And John's specific question, I don't have the exact language, but basically is the NDX 100, is it possible that it is forming some type of bottom? And do the daily time frame charts specifically, do they generate any kind of signal for us? So here is the NQ specifically, which right now is trading below the B point of a potential A to B equals CD to the downside. So, John, as long as the NQ remains below 10,922 out here, the threat of that A to B equals CD to the downside exists, and price is below. This is going to be day number 2, it looks like, below the bottom of its bullish structure daily profile. So if you're asking the question, is there a pattern on the daily time frame chart for the NQ that suggests that today is a bottom? The answer is I don't have that. But what we do have that could suggest that the move lower has stalled, is over, or a counter trend rally, is the fact that price has also got down on the weekly basis at the bottom of its bullish structured profile. And that makes the 10,720 level. And that means that we just can't rely upon the mere fact that the NQ is trading below its B point out there and just assume that it's going to go ahead and form that A to B equals C to the downside. It may over time do that, but right now a key level of support is held, and that's going to be the bottom of that weekly profile. Now, John, I also had mentioned that I wanted to take a look at the QQEW out here, the equal weighted, just to understand what was going on underneath the covers. And in this case right now, it shows a hammer candle. And when an instrument makes a hammer candle, I prefer to see them completed at the end of a pattern out here. I don't have the end of an A to B equals CD or anything along those lines inside of it. The A to B equals CD pattern for the equal weighted ETF, the QQEW, actually gives us a price projection, down at... Sorry, I don't know why it's not taken, but there we go. And that would give us a price projection of 77.80. But nonetheless, you're very familiar with it. I know you pay attention to those swing points. And when you get a test and rejection of a swing point, which is what we have at the moment inside the QQEW, the equal-weighted ETF, if there's a close above 82.70, whether there's a bullish reversal candle or not, well, price would have rejected that level. And that could suggest a bounce. And in the QQEW, that bounce would take us up to Stevie's green line, currently printing at about 85.93. One reason to hesitate on calling that the bottom, John, is the mere fact when we take a look at volume right now, we're going to see that the volume that the QQEW is dealing with is September 11th. And that had 71,185 shares. We're already at 100,000 shares. So odds almost favor if we're going to use that as our tool to identify bottom, because price is pushing into a swing point with volume. That price, even if we get a close above 82.69, there should be another push down with lighter volume to confirm that. So that's what I see.
Yes. Thank you so much. I might just interrupt with one last request, and I'll sign off. But the IGV ETF, which is the big software stock ETF, it's got Microsoft, Salesforce, Adobe, Workday, on and on and on. If we take a look at that pattern, that looks even better from a short-term bottoming perspective this very day. And I'll be looking at your charts on Tiger TV. So thanks so much, and we'll see how this plays out, sir.
Absolutely. John, thanks for calling. Good to hear from you. And so John brought up the IGV, indicating they thought that it looked better, to help indicate that there could be this bottom here. And he's absolutely right. Not because he's right, but he's absolutely right, because if you take a look at where prices pulled back to, John, it is the breakout level. And that's that daily breakout level, 293.39. That is established by that TD9 count. Now, you know, and I know that had we not used this as the breakout, that if somebody had asked us to take a look at a blank chart and figure out where the breakout level, we would have chosen the swing point. And we would have chosen that swing point from right back here on August the 11th. And price hasn't gotten down there. It's been close, but it doesn't look like it's actually hit that level. But the real breakout is based upon that TD9 count. So 293.39, you're right. As long as price holds that, we're good. Now, with regard to the IGV, the question is this just a counter trend rally? And the way we would know that, that's how we use Stevie's green/red line. You can see it's green right now. And that's priced at 307.68. And yes, folks, it's going to move up and down slightly in numbers as price moves up and down. But what we do know is that if this is only a counter trend rally, that's where it would end. So in other words, prices held support. You got the nice bullish reversal candle. Let's go take and move up to the 307.69. Now, the easy way to put this together with the short-term time frame charts that we looked at is just to continue to watch the short-term time frame charts. Understand where the battles are at. I mean, this is, folks, this is giving you a competitive advantage. This is like you being a coach of a football team and knowing, or a baseball team or a hockey team, and knowing the other people's plays ahead of time. So what are the plays ahead of time? Just simply come back to that 30-minute time frame. Understand that prices just hit that resistance level we're taking a look at. 10,880. That's the top of that daily profile. If there's a close above that, the next level becomes really the U.S. opening range, 10,939. If there's a close above that, 10,990. If there's a close above 10,990, it's 11,163. We're just trading by the numbers out here. It's like paint by numbers. And really, it is paint by numbers. We're just letting the screen be painted by buyers and sellers. They have certain patterns that when they are present, they assist us in understanding what their intent is and where price will move to. None of us out here can control what the next move is out here, but you and I can read what the market is communicating to us now. And what it's communicating to us now, no matter what time frame we look at inside the NQ, it's suggesting that there's as long as price holds the bottom of that weekly profile, to at least expect at least a counter trend rally out here. Now look, it's a totally different picture. I believe it's a different picture. If we go take a look at the Dow as an example. Well, I don't know if it is or it isn't. Let's go find out, Stevie. If we take a look at the Dow, well, we'd already established that the Dow was also pushing down to the bottom of that weekly profile. So it's trading right around that level out here. Let's do the same thing. Well, I was going to do the same thing. Now that we've got the Dow, we can see the Dow at this stage is trading back above the bottom of that weekly profile, 26,758. Oh, you know, the other thing, I'm going to punch this up here. And I don't like to lose my thoughts, but I lose my thoughts all the time. The other important element here to help John and everybody else answer the question, what are the markets doing intraday, is to take a look at market breadth. So let's go look at the market breadth. I'll give you the shortest ultimate market breadth that I've got, which is a 30-minute time frame. And this right now, well, this is the day. I'm sorry, this is the weekly, the daily, the 240, and the 60. So what we can see here is we're on the precipice of an intermediate term change in trend out here. Let me get rid of some of the lines. You can see that right now we have 20 instruments trading above the top of their profile for the weekly, 23 below the bottom. So we've got a crossover that's shown. Of course, this is a weekly time frame, and that's going to be really important, is what does it look like at the end of the week. But right now we're at that precipice. We're looking out over the edge of the cliff out here, and the question is, are we going to jump over? Are we going to jump over right now or not? Well, we're back to the short-term time frame. My apology, I grabbed the wrong market breadth tool. Here is the short-term market breadth tool. Now, in this case here, what we can see is the green line, or the greenish line. You can see it's above the red line. There's 52 instruments on the 30-minute basis where prices trade above the top of their profile, 52%, 57% now, and only 10 below. This says that the intraday rally should continue. Is that helpful to you at 1:38 in the afternoon? Steve Rhodes with TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So another good question here coming in. This one from Eddie. And Eddie writes in, he says, is there any bullish case for Apple? Do you think we bounce near term, like tomorrow? Well, we're bouncing right now. But the answer to your question with regard to is there any bullish case for Apple? Well, is it a coincidence that the NQ has pulled back to test the bottom of its weekly profile? And then when we understand the influence that Apple has on the market and we take a look at the weekly time frame chart for Apple, Eddie, that it too has tested and rejected the bottom of its weekly profile. Now, it's bearish in structure, so 103.80 is really going to be your key level. On the daily time frame, if you're asking me, can I come up with some type of bottoming pattern? I can't. It's very much like the same question that John was asking. The daily time frame, no, I don't have it. If anything, the daily time frame for Apple suggests that price wants to pull back to 93.71. Now, that may be what it's doing, but at this stage here, it's really important to understand where support is at. And there's no doubt that support is at 103.80, or there should be no doubt in your mind that you've got support at 103.80. So that says that, yeah, there could be a bounce. Now, since price at this stage at 143 couldn't bust them down, when it tries to bust them to the upside, so I owe Tom another $1 out there for using that famed patented expression, if you can't bust them down, price will try to bust them up. Well, in this case here, the bust them up, again, a counter trend rally would be about the 117 area. It's printed on my screen around 117.14. We know that number is going to change, but that's where, if this is just a counter trend rally, it should stop at about Stevie's green line. Maybe it's the bottom of the daily profile, unless there's a new profile that forms. So 121.73 out there. So, Eddie, that goes along with the conversation that we've already been having here for about the last half hour, and I hope that helps to answer your question out there. Let's go to so I was going to move over and take a look at the Dow equity future contract. So let's do that. So the Dow equity future contract does not look anywhere near as good with regard to signals as the NQ, but the NQ is the one that has moved the market slower. So perhaps we should be paying more attention to it. However, let's take a look at the Dow equity future contract. This is the daily time frame chart, which you can see has busted through TD9 count support, 27,363. That's its breakout support. Its 200-day exponential moving average is 26,500. And the next support level on the way down will be 26,110. So that's what's going on in the daily time frame. The weekly time frame, I can't because it's option 2 out there. Our apologies for some of the connections, but hopefully we're all good. Thumbs up in the Tiger's Den. Hopefully you can. We were taking a look at working on getting your charts. Okay, they're working on getting my charts into the system. You guys can hear me. I'll just share with you on the 4-hour time frame chart, the 240-minute time frame chart. The current bar is bar number 8 of a TD9 count. So we know that the lows can form on bars 8, bars 9, or the bar following 9. So there's the potential on the 240-minute chart for a bottoming signal. On the 2-hour time frame chart, we've got wave number 7. That's letter G. I believe we had that same pattern on the NQ. On the 60-minute time frame chart, Stevie's got nada. Don't have anything. No bottoming signal there. The 30-minute time frame chart, we've got the Rhodes Momentum Indicator signal. So let's stay with the 30-minute time frame chart. If this is more than just a intra-session counter trend rally, then the YM will close above 26,842. That's approximately its high. That is the top of its profile out there. So that's the number that you're going to be watching, 26,842. What you'll know is if you see a 30-minute close above that level, that says more rally. Now, more rally on a 30-minute time frame for the Dow, well, could take you up to 27,486. That's the breakdown level out there. So that's what we've got going on there. Let's take a look at the ES Mini out here and just try to pull this apart. This way, it will really assist each of us out here with trying to understand what the markets are communicating to us as of 1:48 in the afternoon. Well, here we start with the 30-minute time frame chart. You see the same wave number 7, Rhodes Momentum Indicator bottom, and price trading right into resistance, the top of that daily profile. So 32.43 is going to be the nut. If price can close over 32.43, if price can close over, then it's going to be the ES Mini. If price can close over, well, I would say that the run, the ES Mini, if price can close, would take you up to 32.82, the bottom of the European opening range. It'd be between 32.82 and 33.86. That's the hourly. I'm sorry, that's the 30-minute time frame inside the ES Mini. Well, shoot, let's just see. What did I do? Did I delete that? Apparently I did. Let me get my 30-minute. Just curious on the ES Mini, because our question is, the question you should be asking is price going to get above 33.42? Well, odds would favor that it can do that it would do that if we have positive market breadth. So we need to go figure out if we have positive market breadth for that 30-minute time frame out here. And voila, we do, sort of. There's 139 instruments trading above the top, and this is for the S&P 500, the top of their profile, and 139 instruments trading below the bottom of their profile. So we've got a draw here. And we've got a draw, and we know where resistance is at. That's at 32.42. Where's support? 33.22. So the ES Mini, the Dow, not as bullish as the charts for the NQ. Now, maybe each of these instruments are going to bottom on a different day, if in fact they are going to bottom. But the short-term time frame chart still's got the bottoming signal there. We just have to keep our eyes to see if support holds on any kind of move lower. On the 60-minute time frame, you've got a key reversal session, but you can see that price is running resistance for that time frame, really at the top of its profile as well as Stevie's red line. So that says you've got resistance between 32.43 and 32.49, the latter being the more important number out there. A close above that should signal in the ES Mini a continued rally higher. The 2-hour time frame chart, we got not a zip zilch, so no bottoming signal there. The 4-hour time frame chart, the same thing, although I do see that this is also in wave number 7, but that's on the 4-hour time frame. On the 5-hour time frame out here, we can see that price is stretched, got the Rhodes Momentum Indicator signal, but no bullish reversal candle. So what we've got out here is we've got a tale of different stories for different markets out here. I'm going to suggest that perhaps no. I'm going to suggest that it's the NQ that's going to be key out here, and that's what we'll continue watching. Steve Rhodes with TFNN. We'll be right back. We'll finish off the show, take a look at the precious metals.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers along with weekend and evening updates when warranted. The opening call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the opening call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So to finish off the show, let's spend some time in the precious metals area. We're right now take a look at the gold futures contracts out here. You'll pay attention to panel number 2 from the left. That is the December contract. And the key level to be watching there is 19.2070. You can see gold is off of the low so far of the day. If price can regain and close back above 19.2070, then really no damage, and price is just consolidating in between its daily profile. Between 19.20, and you got a descending trend line, so we can't really say 19.92 is the upside target. It's probably right around 1970, give or take. But watch 1920. 1920, it closed below that today. A secondary close tomorrow would suggest there's problems in River City. If we take a look at River City, why did gold bounce? Where did the signal come from? It came from the 60-minute time frame chart out here. What was the signal? What was the actual TD9 count? So bar number 9, we know that on the TD9 counts, it's the bar 8, bar 9, or the bar following 9 that can identify that low. So far, it's bar number 9. Now, we're trading with inside quite a wide-ranging 60-minute profile. I mean, it's gargantuan in size. It's from 1891 at support and 1945 at resistance out here. I mean, it's big. But where price is likely headed to be able to generate any kind of message for us is Stevie's red line. That also happens to be the center of its profile, or very close to it. So it's in the 1921, 22, 23 kind of range out there. If you see a close above 1923, then guess what? You're going to see gold make a rally up to the 1945 area. If price stops at the 1922, 21, 23 level, well, that would be the end of a counter trend move out there. The 30-minute time frame out here, I don't have any kind of, well, I do have wave number 7. Price is right now taking on the top of its 30-minute profile. So 1912.90. We're $1 above that. A close, well, in this bar right here, in the next 3 minutes. A close above 1912.90 says gold should rally further. Folks, thanks so much for being here. Stay tuned for 2 more great hours and have a magical Monday. And tune in tomorrow for the Trader's Ed Show for Taco Tuesday, sometimes Thirsty Tuesday, but it'll be a terrific Tuesday no matter what. Have a magnificent Monday, folks. Take care.